And joining us right now to talk about the implications is David Rubenstein. He is co-founder and co-chairman of the Carlyle Group. And David, good morning.
Good morning. Thank you for having me.
Let's talk about what this means for the markets. You have seen the equity markets kind of off and running, a gain of maybe 2.75% for the Dow futures right now. We've also seen Treasury yields higher as well, somewhere between 12 and 14 basis points on the 10-year. What do you think this means for the stock markets, first of all?
Clearly, the stock market today will be up very strongly. I think many people in the financial markets were pushing for and wanted a Trump victory, and they got that. But also what you got out of the election appears to be a very strong, united government in the sense that the president is likely to have the House and the Senate, not just a majority, but many people in the House and Senate will feel they got elected because of him. And not since 1964, when Lyndon Johnson won overwhelmingly and he had big majorities in the House and the Senate, many of which those seats came about because of Johnson's strong coattails. Did you have a president with this kind of power? So Donald Trump has the power as president to get a lot done through Congress, and I think members of Congress will go along a lot with what he wants. Even when President Obama had majority of the House and the Senate initially, he didn't have quite the coattail effects that I think Donald Trump has had in this election. So I think you're going to see a united government. I think the country seems to want a united government. I think you're also likely to see the markets go up for a while, for sure.
So if he has a lot of sway over those senators and especially House Republicans, what do you think he will go after first? Because even if you have that kind of sway, you can't do everything at once. How do you think he will prioritize, and what do you think the major initiatives are going to be?
Well, initially, he said that he will do tariffs, and I suspect that that doesn't require Congress to be involved. I think his main legislative initiative, though I obviously can't speak for him, would probably be things in the tax area. His tax cuts from 5 years ago are expiring, and so if he wants to have them extended or enhanced, he'll have to get that done relatively quickly. I suspect if he controls the House Ways and Means Committee and the Senate Finance Committee, it looks like he will, he shouldn't have as much difficulty getting that done. You'll have to deal with the deficit issues, but I think the markets don't really care about deficits. That's what we learned. So as long as the markets don't care about deficits, and they don't appear to be, I think he can get through his tax legislation.
You might argue that the Treasury market cares a little bit. And look, we had Gary Cohn saying as recently as last night that he doesn't think that this is necessarily concerned about deficits. You're just seeing the Treasury markets normalize and having higher yields on the back end of the curve. Do you think that's the case?
Well, I think the theory will be that, yes, we'll have some deficits for a while, but if economic growth can get to the level we want, that's the best way to solve deficits. There's no way we're going to solve deficits by cutting spending. We just can't cut the key parts of the government that really are 90% of the spending, which are entitlements, defense, and interest. The only way you can really get more revenue in is greater economic growth, and I think the markets will assume that that will come about. If you didn't ask me, but if I were to say who are the big loser in this election, it's probably the pollsters. The pollsters, I think, were not that accurate, and it may be artificial intelligence could be brought to the polling community because they seem to have not really predicted exactly what was happening. And it now is clear that there was a gigantic wave in favor of President Trump.
David, to your point about growth and to your point about dealing with deficits, there's a fascinating piece. I don't know if you had an opportunity to see it. Larry Fink of BlackRock writing, quote, "We need to increase the size of our economy so that what we owe becomes smaller relative to what we make. If GDP rate rises at an average of 3% in real terms over the next 5 years, the country's debt to GDP ratio would stay roughly stable at a high but reasonable level." Do you believe that we can get and stay at a 3% or above rate, given all of the sort of cross currents that we're just talking about?
Nobody knows for certain, but I would say that if you can get 3% or 3.5% growth, it will solve a lot of problems. Right now, the budget is basically 90% interest, entitlements, defense spending, and there's no room to really cut there. And as a result, you're only going to get through this with growth. There's no other way that I can see.
Okay, let's talk maybe immigration. I would think that would be high on his list of things to get past, too. Taxes, I understand, tariffs, and immigration. You think those are the first three?
Immigration is an issue that the president can do a fair bit on his own. I don't know whether the president will go. I can't speak for him, but whether he'll try to get legislation through Congress. Clearly, it's very complicated to get that legislation through. But the legislation that was negotiated earlier this year that didn't pass the Congress, if he were to support something like that, I suspect it would get through. In the early days of his administration, the first 100 days, he should be able to get a large part of what he wants to get done, just as Roosevelt did. Now, the 100 days is an artificial measurement, but I think if in the first couple months, if President Trump can get united behind a couple ideas, I think he can get those through Congress, because I think Congress is largely going to go along with what he wants, because it's clear that he had coattail effects throughout the nation in ways that the pollsters did not see.
It's hard to imagine too many Republicans standing up to him and saying, no, we're not going to do what you want to do.
I agree with you. 4 years ago, you invited me on exactly this day, 4 years ago. And I said then that I thought President Trump would run again. And if you go back and look at the tape, I think you were all skeptical. I didn't anticipate he would exactly do what he did, but I did think that he really wanted to prove that he had won the last time. And I think he deserves some credit for going through very difficult circumstances. He overcame a lot of financial problems. He overcame a lot of legal problems. And I would not have anticipated he'd been able to do this, but I did think he wanted to run. I should say, finally, that President Biden deserves some credit for what he has done as well. He spent 50 years in public service, didn't do many things that he could have done on the private sector, but he really dedicated his life to public service. And I think a lot of things that he did will benefit the country and President Trump. I think the CHIPS Act, for example, the Infrastructure Act will have benefits we'll see for many, many years. So while President Biden will be leaving the political scene, I don't think we should just say that he didn't accomplish a fair bit in 4 years, even though he didn't control Congress completely the way that President Trump does.